Okay, hello everyone. This is Gabriel and I'm here with another update. I wanted to say something before I get into this account. Yesterday I did an update and I started showing all the charts. I made a comment that I was going to start showing the charts. I will do that, but I can't do that on every update. It's very time consuming. I mean, usually I just take about a few minutes, go through the account, go through the report, and then that's pretty much it. And it usually takes about 15 minutes max, okay? But I ended up having to record several videos and cut them apart, and it just, the editing, I didn't really like how it turned out, to be honest with you. So I will be giving updates, and every day I'll start giving them every day. What I will do is this: I will give a public update as well as a private update. But this update, the first week of the public updates, I'll actually show you guys the trade. Now, it's only going to be current market value, okay? And I'll go through the report. I'll also go through the account. Now, after that, I'll do public updates, but it'll be blocked like how I normally would do it in the past. All right? So if you want full access, of course, you know what that means. You would have to join the network and you'll be able to get full access. You can also join the free trial. You'll also get access that way as well. All right, so enough of that. I'll get right into the report as well as the account. Now, I just placed trades. I closed all the trades on this account, and I had some other trades that I opened up. That's the red right there that I closed out. But here, this is the amount of the bits. Okay, this is all bits. I have some people who ask, is that $1 million? No, it's not $1 million. This is a Bitcoin account. So these are bits. Okay. Now, these are brand new trades today, Tuesday. I didn't do current market movement in this account, just current market value. These are all placed based on current market value. So what does that mean? It means that we will leave these trades running and we'll have them running for about 1 month. And after the month, we'll see the profit form. So this is currently where we are with the profits. We were at 1 million bits. Now we're at 26,000 bits after collecting the profit. So we're starting all over again. I want you all to get the feel of how this works. So let's open it up so you can see that's November 10th. All these were placed on the same day. Okay. So this, except for the ones that are the indices, I didn't close those out. I will close those out at a later time. But as far as the Forex, there's no cryptocurrency on here, just Forex trades, some indices, and that's pretty much it. Okay. So I wanted to show you guys this so you guys can get an idea, because sometimes when I do these updates, it may seem as though it's almost too good to be true because of all the blue. A lot of you see the blue and you're like, oh no, it's just, or you might see the numbers at the top, and off the bat you're thinking, no, it's just too good to be true. And I get it. I get it. I get where you're coming from. But this is why I do it this way. And I'm going back to my, I guess you can say, Forex roots. Going back to the original way of how I used to do things, so that everyone can get a chance to see exactly how it works. Now, some of you might be wondering, what about the current market movement crowd? The current market movement crowd, I will do an update as well, meaning I will place trades on an account for current market movement. And in fact, I have already placed trades on an account for current market movement. Let me actually go there and show you that account. This particular account belongs to an account management client, and this person specifically wanted their account to be traded current market movement. Now, these trades were placed this week. Some of them were placed today. I can't show you the amount, and that's because of the agreement that I have with this particular client. Okay, but I will show you the trades for current market movement and how these reflect current market movement. So here we go with these trades here, and you can see not every one of these are in profit, but the majority of them are in profit. And the ones that are not in profit, we are waiting for them to get into profit, and they will get into profit. You can see these trades were placed on the 9th. Okay, all of these trades either on the 10th today. Now, the reason why some of these are placed on the 10th, if it's current market movement, which is Tuesday. Tuesday's the 10th. Monday was the 9th. Now, the reason why these were placed, some of them were placed on Monday, and then some of them were changed on a Tuesday, is because that is usually the case when you take trades on a current market movement trade. Sometimes if you place a trade on a Monday, on a Tuesday, you may have to readjust, and that's all. So by Thursday, we're looking for this account to collect its full profit. Okay. And just to give you an idea of what's going on here, this is exactly what's going on here with this specific account. And at the end of the week, we're looking at either Thursday or Friday before we collect. All right. So this is a current market movement account. And the first account I showed you was a current market value account. All right. So real quickly, let's go over the report. I also want to show you the report. I don't want to just show you the account. So again, when you look at the report, make sure you look at the date. Make sure you see when the research has been completed. It has been completed on today, November 10th, 2020. Okay. And we are going through the Forex market. So we see the Australian Canadian dollar. This changed, the current market movement changed from a sell. It was a slight sell. It wasn't really confirmed, but now it's a confirmed buy. Okay. And we still have a lot of alignments here, and that's a good thing. We still have that stress taking place with the Australian dollar versus US dollar. Will it give in? Maybe. It's already on day 2 and there's stress, but it hasn't caved in as of yet. So we still have a buy on that current market movement. And let's see here. And this is pretty much what we have here, guys. This is how the updates are done. Now, this is the video version of the updates. Once you get into the network, you'll get access to the actual file, and you could look at it on your own time whenever you have the time to do it. Okay, so you can see most of these current market movements have been on for about 2 days now, and you can get an idea based on the current market movement that I just showed you on that last account and compare it to what's going on with the report. You can definitely get an idea from that perspective as well. And there's still stress taking place with the New Zealand dollar on current market movement. Stress taking place with the US dollar. We do notice that the dollar itself is attempting to get out of the overall sell trend for this week. If it does get out, it may. I mean, it's definitely a possibility. If it does get out this week, overall, the current market value for the US dollar is a sell. So you're going to have those moments where the current market movement will go against the current market value. And that's what we call a storm. You're going to face the storm. And depending on what type of currency or what type of asset you're holding, like if you're holding like commodities or something more volatile like a cryptocurrency, you're definitely going to see the reaction from the storm. It's going to reflect your profits. So always keep that in mind. For those of you that want to hold current market value and you want to hang in there for the long run, just always keep in mind it will definitely be a test. This is a test. It's a test of your patience. I want to show you what the results are step by step, week by week. Now, at the end of the collection week, I'll show you the final result. For those of you who are public viewers online, I'll show you the final result of the first account that I show you on current market value. And you'll be able to see for yourself how that works, how over time, usually within a month's time, if you keep the current market value there, yes, you're going to have some storms, okay? It's the market. It's the financial market. So you should expect that. But the most important thing is hold on. Just hang in there, guys. And that's true for a lot of things. All right? I do want to talk about, I want to talk about the Dow Jones, the U.S. markets. The Dow Jones definitely has been going really strong. It's been going really strong, And we don't see any stress, but we do see a change in the NASDAQ. And I believe there was a stressor on on one of these other ones. Yeah, the China A50, there was a stress on the current market movement. Now, on the indices, I will say this is, you want to take the indices on the current market value, to be honest with you. Same with the stocks. If you decide to trade stocks, invest in stocks, go with the current market value. Current market value can be applied to any asset, any market, okay? Any market, any asset. And we're almost done here. So here with the NASDAQ, it's no longer aligned. This is it's Tuesday, so it restarted on Monday. So we're like at day one with a new start on the current market movement, because it was a new trend yesterday. So now the trend is ongoing. This is the current trend. Now, I want to say this as well. There is a risk involved when you're holding current market value, okay? Just like there's a risk when you're holding current market movement or just holding any asset in the market. And the risk is this. When you're looking at a situation like the NASDAQ and you see the current market movement going against the current market value, it's very natural to want to jump out and just take your trade, collect your money, take your profits, and, let the storm ride without participating in the market. That's okay. If you do that, there's nothing wrong with that. There's absolutely nothing wrong with that, as long as it's profit. All right. Now, if you just jump in and, you're not in profit yet and you jump out, that's a different story. Okay. But there's a risk involved. There's a percentage risk that the current market movement here could overtake the current market value of this long-term move. Now, how often does that happen? Not that often, but there's a small percentage when it does happen, and there's a possibility, because there's a percentage a small percentage when it happens, that it could happen. Okay, so just keep that in mind, but don't let that become a stressor. And that's there's a way to combat that, and here's the way to combat that. You have to have a mix in your account. There has to be more than one type of asset in your account, because if you have one asset that happens to do that, let's say you have you're trading 5 assets in your account. If one asset happens to do that, all 5 you're holding current market value, but one happens to attempt to, one actually happens to change the direction of that current market value. Well, number one, you'll have time to really catch that. It doesn't happen like, you'll be able to catch it. That's what I'm trying to say. But here, the main point is this: as far as diversifying your holdings, if one of them happens to change current market value, the other 4, in most cases, will continue going in the right direction. It doesn't change all the way. All of them won't just simultaneously change on you. Okay. Now, I was going to mention something else, but it's going to probably make this video a little bit longer than I want it to be. Okay. But I do want to say that. Okay. So the percentage is very small. The percentage is higher with the current market movement. But again, the chance of you catching it is pretty much the same. You got a day to catch it with current market movement. That's the difference. With current market value, you'll have about anywhere from 3 to 4 days before you actually notice it, because there's a lag. There's a lag as far as all the information coming into the system. There's always a lag. Okay. So the difference is the lag with current market movement is about a day. The lag with current market value is about 3 to 4 days before you actually catch it. Okay, so if you could wiggle a little bit of space for yourself with your trades and be able to catch it on current market value within the 3 or 4 day time frame, you can make that back up. You can make back that loss with the profit that you're going to make in about 3 to 4 weeks. If that makes any sense. I hope it makes sense. If you're not sure about what I'm saying, just contact us. We'll clear everything up so that you'll have a better understanding, okay? And we also see the same thing taking place with the S&P 500, all right? We have now, this is actually a new trend. Starting today, the S&P 500 now is starting to take a downturn. starting to take a downturn. All right. And that's what we have there. And we see a stressor on the volatility index on current market movement. So we might be seeing some extreme volatility taking place very soon in the whole marketplace. So keeping an eye on the volatility index in that regard. So I'm done with the update, guys. If you have any questions, contact us. We're here to help. We got our people standing by, and this team here is absolutely outstanding. I'm so grateful. Guys, take care and God bless.